All right, let's talk about financial chaos. We're going to dive into some of the most spectacular, mind-bending market meltdowns that actually happened. Now, the title says 10, but today we're focusing on a couple of true stories where billions, and you heard me, trillions of dollars just poof, vanished. Let's get right into it.
So let me just ask you this straight up. How on earth do you lose $1 trillion in just 36 minutes?
Whoa, $1 trillion? With a T? That's not a real number. That sounds like something out of a sci-fi movie. But you're telling me this actually happened?
Oh, it happened all right. And that brings us to our very first case file, the infamous flash crash of May 6, 2010.
Okay, so picture this. The market is already super nervous because of the debt crisis over in Greece. And then, out of nowhere, things just go completely off the rails. The Dow Jones plummets almost 1,000 points. $1 trillion in market value, just gone. And the craziest part, most of this happened in literally just a few minutes.
I mean, just look at this timeline. It shows you how fast this all went down. At 2:32 p.m., things start to slip. By 2:45, the high-frequency trading algorithms are in a total frenzy. They're playing this insane game of hot potato with enormous orders, just passing toxic positions back and forth, which basically poured gasoline on the fire and sent everything into a nosedive.
Wait, hold on. 27,000 trades in 14 seconds? That's not a market, that's a machine having a complete and utter seizure.
And that's the thing. All those automated systems, they all had their own risk plans. But here's the kicker. They all failed in the exact same way, at the exact same time. So the big takeaway for us looking ahead, your risk plan better have a plan for the day when everyone else's plan completely implodes.
But hold on, because the chaos was just getting started. If you thought that was wild, it gets so much weirder. For a few terrifying moments, some of the biggest, most respected companies on the planet became basically worthless.
Just look at this madness. Accenture, a massive global company, its stock price fell to a single penny. A penny! Procter & Gamble just cratered, down almost 37% in minutes. And then on the flip side, Apple's stock was quoted over $100,000 a share. How is that even possible? Well, it's because all the automated buyers, what we call liquidity, they just vanished. It's like if everyone in a supermarket sprinted for the exit at the exact same time. There was nobody left to buy anything, so prices just collapsed into absurdity.
And that leads us to our next big lesson. In a real crisis, that liquidity everyone counts on, well, it can turn into a complete myth in seconds. The market becomes a black hole, and prices that seem totally impossible can become terrifyingly real.
So you might be thinking this was all just a perfect storm of computers gone haywire. But years later, the investigation found a person at the center of it all, a single trader, working from his parents' house in a London suburb.
Right, he was accused of something called spoofing. Basically, he was placing these gigantic orders to sell, but he had no intention of ever actually selling. It created this fake mirage of massive selling pressure, which tricked all the other algorithms into panic selling. And right when they did, he'd cancel his fake orders and swoop in to buy up the real stuff for cheap.
This is what gets me. Look at this chart. This guy, Navinder Singh Sarwar, allegedly made about 40 million bucks. But look at the scale of the damage he played a part in. We're going to talk about Knight Capital next. They lost 440 million, but both of those numbers are just dwarfed by the $1 trillion that got wiped out. It's unbelievable that one person could have that kind of impact. It just goes to show you how a system as huge and complex as the global market can be so fragile. Sometimes all it takes is one person, or, as we're about to see, one bad line of code to tip over the first domino.
Which brings us perfectly to our next meltdown. This time, the problem wasn't some outsider trying to game the system. No, this was a completely self-inflicted wound. A catastrophic software bug at a huge firm called Knight Capital.
So it's August 1st, 2012. Knight is getting ready to roll out some brand new trading software. What they don't know is that a few tiny, sloppy mistakes are about to wake up some old, dead code. A zombie hiding on their servers, just waiting for its moment.
Okay, let's get into the weeds here because the mistake they made is so simple and so unbelievably devastating. The developers decided to reuse an old piece of code, a flag, for a new feature. But on one of their 8 servers, because a technician just forgot to update it, that same flag still meant something else. It was the on switch for a dangerous old test program called PowerPeg that should have been deleted years ago.
They reused a flag? No way. That's programming 101 what not to do. That is literally like finding a can of gasoline, slapping a water label on it, and putting it next to the campfire. What could possibly go wrong?
Exactly. And this gets to our next big lesson. In programming, they call this technical debt, all the junk and lazy shortcuts you leave behind in your code. While Knight Capital learned the hard way that sooner or later that debt comes due. And in their case, the bill was $440 million.
But wait, here is where a really, really bad day becomes an all-time company-destroying catastrophe. In the middle of the panic, the tech team tried to fix the problem and made the one move that would guarantee their doom.
Okay, just follow this train wreck. Step 1. Attack forgets to update one server. Step 2. That one server starts spitting out garbage trades from the zombie code. Okay, bad. Step 3. The team panics and decides to fix it by rolling back the software on the other 7 servers. But what did they roll back to? They rolled back to the old, bad code that was still on that one forgotten server. In a flash, they copied the virus to their entire system. It's just a masterpiece of disaster.
So the lesson here is huge. When your house is on fire, your first instinct might be to grab what you think is a bucket of water, but it could actually be gasoline. Knight Capital needed a kill switch, a giant red button to just shut everything down. Instead, their fix burned the entire company to the ground.
Now, these stories are from 2010 and 2012. In the world of high-speed finance, that is practically the Stone Age, which brings us to the big, final question we have to ask ourselves.
Today's markets are so much faster, so much more complex. The algos are smarter, the connections are instant. Sure, we've built some circuit breakers and put new rules in place, but have we really fixed the underlying problem of just how fragile everything is? Or is the next big glitch, that next trillion-dollar tumble, not a question of if it's going to happen, but just a matter of when?